Good morning, everyone, and welcome to the pre-market homework session and trade plan setup for Monday, September the 8th, 2014. Welcome to everybody. Hope everybody had a good weekend. And for those that are visiting, my name is Doug McKay. I'm the founder and head moderator here. We've had a private Skype room now just over 5 years this month. If you're interested in checking it out, we come together in the Skype room to talk about the market, talk about trading and our trade ideas. And if you want to check out the trade room, send me a contact through Skype. You'll need a Skype account. It takes 30 seconds to open and it's free. And I'll be Doug_McKay, M-C-K-A-Y. And I'll be the one from Windsor, Ontario, Canada. Of course, you can always send me an email to d.mckay@stealthtrader.com, and I do respond to my email. So each morning we come together in this live session. I go through my analysis, the macro to the micro, and then I look at what my hypothesis is for the day, and then where my trade areas are going to be with my targets. Before we do anything, I do have to get a disclaimer done. So this information is for the purpose of educating members who want to expand their knowledge in the business of trading. It's not for trading or investment advice. Only you are responsible for the trades or investment decisions you make. Trading futures or any instrument involves risk loss. Please consider carefully whether futures or options are appropriate to your financial situation. Only risk capital should be used when trading futures or options. Investors could lose more than their initial investment. Nobody here is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results, and any trades that you see in here are for education purposes only. Please trade your own plan and do your own due diligence. Okay, so let's take a look at the news first, get that out of the way. So today we had Canadian permits, building permits at 8:30 Eastern. All these are Eastern time. We have Treasury Secretary Liu speaking. He should have started speaking a few moments ago. But other than that, we really don't have any real news today. There's consumer credit month over month at 3 p.m. But other than that, it's pretty much a low news day for us. So let's take a look. I always like to look at the macro to the micro first, and then drill down to the in-depth chart analysis. So I do this because I always want to be, aware of where we are within the context of the different time frames. Because remember, different time frames have different participants, and I want to be aware of what the trends are. So you can see I always start with the monthly. Great slope, great separation on the 9 EMA and the 20 SMA. Those are the two moving averages you'll always see on all my charts. And you can see that we've been paralleling the 9 EMA quite nicely, and we've got a beautiful trend still on the overall monthly chart. On the weekly, not too much different. We did come down and test the 20 SMA, but we didn't close below it, and then we popped back up, and of course we continued the trend. Got a bit of a technical gap here on the weekly. A tech gap on this should bring us down into, I think we'll close that gap in around 1981.50, that CHVN there. But overall, the trend is still very much intact on the weekly. Going down to the daily, same thing. We've got good slope, good separation, losing a little bit of energy up here, and we've been consolidating sideways, but we have not closed below the 9 EMA, and until we do, that trend is still intact on the daily. We came down and closed this technical gap, and basically have been going sideways with a pop-up to take out that 2010 rule of 10 and go up and put a Globex all-time high at 2011. Let's just jump over to the geometric chart here. I'm playing around with a smaller time frame downward sloping fork, but let's look at the daily first, and then we'll bring it up. You can see that currently we're trading in the upper distribution. of the shorter time frame upward sloping fork, and in the lower channel distribution of the longer term upward sloping fork. A test today to go up and take out and test the upper line of the shorter time frame upward sloping fork would bring us up into 2023 and a quarter. So just write that down as a measured move to the upside. To the downside, a test of the lower line of the longer term upward sloping fork today would bring us down here to 1982.80, but again, I'd be looking at that 1981.50 CHVN. So other than that, there's not a lot of information. Just want to drill it down to the 4 hours so you can see this on the smaller time frame. I'm not convinced that we've got some fairly decent frequency going on, but of course it's still a little bit early. But I wanted to point out the fact that we do have a couple energy points that you want to pay attention to down here, 1991.50, and a little bit further out, 1990, call it 1994 area. So just keep those in mind. I'm going to keep a close eye on this in the next few 4-hour sessions and see if we continue with the frequency. But if we do get a gap close, on the weekly, these are good energy points to take a look at first. So let's go down to the intraday time frames and see what those trends look like. Go down to the 4-hour. You see that we've basically been consolidating sideways. This is a good example of a technical gap. We moved away from the 9 too quickly and created this technical gap, and then we closed the gap through price, and gap has just been filled in the last 2 time frames. We do have a naked cross down here at 2000, so I would be writing that down in your journal as a possibility of a rotation target if we can't hold the 9 EMA right here. Going down to the 30-minute, you can see that we've got a bit of a downtrend going on right now on the 30-minute. Not real strong, but we do have slope and separation, and we are trading below the 9 EMA. So coming in to the RTH session, we do have a bit of a downtrend going. Going down to the 5-minute, you can see that we basically been consolidating sideways, and we're seeing a little bit of weakness here coming in, but no true trend. So let's go and take a look at the bigger picture. Now, the first thing I wanted to do is I wanted to point out, because there was a lot of questions last week on this Renko reversal, double Renko reversal. So I actually posted this last night in the room so that you guys can see how I trade it. I actually took this trade. So basically, we came up and we tested the upper Keltner channel. We got our first Renko reversal bar. Then we got our second Renko reversal bar. Now, my preference is to always enter at the open of the second Renko reversal bar. So that was at 2006, and then the target was 2002.25, which is the test of the Keltner center line, and then extended target if we don't hold the Keltner center line, move down to take out and test the lower Keltner line down here in around 1996 and a quarter. Really, I was looking at 98.50, because by the time we get there, we're likely to see the lower Keltner line at 98.50, but more important, that the 10-day microcomposite VPOC is at that 1998.50. So that was more of my extended target. Now, if you look at the actual results of that trade, let me bring up the ES Renko with Keltner. You can see, sure enough, we came down and we tested the 2002 25, and then we're just chopping around here. Currently, we've broken below the center line of the Keltner, and we're holding below it. And if you see the another Renko reversal or another red Renko here, then I'm looking for that move down and continuation down to 98.50, and I'm currently running 2 contract short on this particular setup. So that's posted in the room, so I hope you guys can take advantage of a little bit more clarity. I mean, we were back and forth trying to describe this setup on Friday. So let's take a look at the big picture in the ES. Let's go up to the composite. Currently trading 2002.50. So you can see that we've got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 days. I'm sorry, I thought it was 10 days. 11 days that we've broken out of the longer term. Okay, remember this micro composite right here that we were trading in goes all the way back to May 27th with the breakout of the prior balance that we were in that was centered around at CHV at 1860 area. But we came up and we consolidated up here, we accepted value higher, and then we broke out of the microcomposite range and value, and we've come up here, and now we've gone in and made a new high. We completed the rule of 10 and made that Globex high at 2011. I still don't believe that 2011 is going to hold. You know, I've watched this many times over, is they do not like all-time highs being put in the Globex, and they will try to take it out in the RTH session. But we've currently found balance in around this 1998.50, and currently trading 2002. Important level to pay attention to is going to be this 2002.75. There's not a lot of price rejection that we can look at here in terms of long-term CLVN and CHVN, so we have to look at the microcomposite and put that into context as what we need to trade off of. So we've got the value area high of the microcomposite up here at 2002.75. If we can get above that, then we're above value in the intermediate time frame, and we're likely to come up and take out this naked close that we've got from Friday. We closed Friday at 2005.75, and then I'd be looking for a continuation. And again, I'm looking for a move up to take out that 2011. I think today is going to be a rotational day. We don't have a lot of news. There's still accepting this value and trading around this 1998.50. So I am expecting a rotational day with an upside bias to take out that 2005, possibly go out and equalize that Globex all-time high at 2011. To the low side, basically we've got the 98.50, which would be rotation back into balance. We're still in the value area, and the lower side of that balance is down at 93.50, and I'm really watching this 91.50 as a key line in the sand. Below 91.50, I'm looking for a move down into the price that we accepted just after we broke out of the balance down here, up at that 1989, with the 88 CLVN being a very important level to us below right now, because below that I don't think 85.75 is going to hold. I'm looking for a move back into this 1981.75, and you can see that was where they tried to hold value on the last time they went up and made a new high with that fractal swing high at 1985.75. Anything below 1980, then I think we get a bigger move down into this double distribution point and back into the former balance down here at the 1967 and a quarter and 1971.25. And once we get back here, there's a lot of repair within the auction down here. This whole month has just been, just a a very poorly auctioned rally, and it's just been just a tremendous trend, and we're going to have to come back down and do some repair. And I think we're going to come back into this 1971, 1967, 25 area and chop around for a while with some moves down to 59. Anything below 56 and a quarter, then I'm looking for that bigger move down to that 47 and 45 area. You've got, well, it's actually shifted slightly. 49 and a quarter. There's a naked close still here at 52. Now remember, 52.75 was the microcomposite VPOC before we shifted up to 67. Then it went to 71 and a quarter, and then it went back down to 67. So if they can't hold, above the 56 and a quarter, then I think we've got to come down, and we're likely to come down into that 52.75 area, because that was where they accepted value before moving the microcomposite VPOC up. So let's take a look at the overnight and start moving our numbers over. So overnight high right now is up at 2,675. So one tick above the range high and two ticks above the value area high from Friday. Our range low for the overnight session is down at 2,001.75, and our current VPOC is right here at 2003. So our net inventory is short overnight, and if we don't get some buyers stepping in here, some sellers staying in control here, they're likely to get a squeeze on the shorts and try to squeeze the weak hands. Now Friday itself was a double distribution, so you've got a key LVN from Friday at 99.50. I'm going to use that number because below that, I believe that we're going to get a move down into that 98.50, and 98.50 is basically the other, right in this low traded area, this low volume node from Friday. So I'm going to use the 99 and a quarter as an area, because I'd get short into that 98.50, already running short, but I would take an add-on here. Now the problem we've got right now is we're going to open up inside a value and inside a range and in the upper distribution, and you've got the overnight low right there. So and you really don't have a real big range, basically a 5-point range overnight. So we're likely to test both sides of this upper distribution right now. So look for on the open to get a fairly decent rotation. Look for an open auction in range, possibly an open test drive, because I imagine we're probably going to come down and test both, test the LVN and then 98.50, and then we can see if we can find some responsive buyers there, and then rotate up through and take out the naked VPOC and the naked close and test the value area high. So it's really going to be a choppy open, so be careful on the open. There's no edge here, okay, until we actually get to the range high and the overnight high, or to that LVN. So really, I'm bracketing this whole upper distribution as a no trade zone, because you have to be below 98.50 or above 2006.75 to be to give yourself some edge up here. So just recognize that fact, and we're trading right at the HVN, and where the VPOC was before they stole, I call it stealing the VPOC into the close with that move up to 2005 and the shift in the last 15 minutes of the trading day. Below 99, you've got a nice trade with the first destination right at 98.50. So you got to be nimble and be quick But I'm really looking if we do get that move below the LVN to come down and test the other side of balance. But the first target below is going to be the VWAP and the midpoint. So I'm going to use the V, even though I'm going to be looking to scale at 98.50, I'm going to be using the midpoint as the first target below the LVN and into the lower distribution, and then be looking for a continuation and setting up for the 80% value area destination trade all the way down here to 93.75. Now the value area low at 93.75 is also one tick above the value area of the microcomposite at 93.50. So that would be the first spot below the LVN that I'd be looking for responsive buyers to step in and hold us inside of value on Friday and inside of value for the last 11 days. A break below 93.50, targeting 91, that 91.50 CLVN. And then, of course, at that point in time, I'm really looking for a move down. If we can't hold 91.50 down to take the 89 out and test that area that we accepted value just after breaking out of the balance. But the real destination that I'd be looking for is a move down to test this 88.25. You can see that 88 is the CLVN below us, and it's basically the range low of the microcomposite, and it's also the range low from Friday. So I'd be looking at that area to hold, and if it doesn't hold, then we've got some some nice targets below. You've got the 86 naked VPOC, which is right above this one ticket above this 1985.75, but the real target I'm looking at, once we break below this 88 level, I don't think 85.75 is going to hold. I'm looking for a move down to the CHVN at 81.75. That's my main target below value and below range. And I'm really, front running this CLVN at this naked VPOC at 1980 with the other side of balance here. Just below it. So I'm going to put a trade zone right in there at 1980, and I'm looking to come down here and bounce off of this 1981. Now, if they don't hold the 80, we've got the value area high as the area to test just below us. That's the microcomposite value area high from the longer term balance that we were in. So I'm looking at that as the first target, and it's actually going to be a trade area too at 78.50. 78.75, sorry. It's so it's pretty tight in this area, but you've got room to get in, and with the break of 1980, because they are likely to come down and test this 1978.75. So I'll take that, and then of course if we break inside of value, then I'm going to press the pedal to the metal because I'm looking at a move down into our extended targets at 71.25. Come on. 71.25, and of course 67.25 with that 67.75 just naked VPOC just below it. And then the key level to hold, like I said before, is going to be this this 56. But I don't think we're going to get there. I'm just going to put it in there anyway because you never know if we get a trend down. 56.25. And then everything below that shifts to this target down here at 52.75, which is a naked close and that former microcomposite VPOC. On the upside, if we break above the 2006.75, you've got a clear target into 2008 and 2010. 2010 is where I expect the first responsive sellers. They're going to be defending between 2010 and 2011, because there's going to be a lot of targets or stops above that 2011. But above 2010, you've got to be looking at an equalization of that high at 2011. And at this point in time, I wouldn't really be trying to fade anything. We've got a measured move target up to 2017 and 2023.50 to look at. And I wouldn't be trying to fade a break above that 2011. I just would hope that you'd be long and holding strong. So that's what I'm looking at on the ES. Let me just bring up the Renko with Keltner to see how those levels play out. You've got 2009.50 at the upper Keltner line. That is that move right up to this 2008.75 to 2010. Currently, we've got the center line at 2003, which is basically right around our VPOC from overnight, and a move down below the Keltner center line and a test of the lower line. It's going to take you into that 97.25, and that's right at the midpoint and our target below that 98.50 at 97.50. So you can see how those line up. Now, a couple things. I did a weekly look at the Russell. And it's in the room, so you guys can take a look at it. I also posted it this morning on Twitter. But you can see that we've got overlapping value, okay, right now between, several distributions. This is the one I'm looking at in connection to the 10-day or the 11-day right here. You've got the current microcomposite VPOC at 1171.10, and then the former one for that upper distribution zone at 1168 1168.30. So really, resistance above the 77, a break above 77, and I've been looking for a move up to 78.40, but really continuation to test the 84 high and the 85.25 CLVN. But you've got to watch this 1180, because that 1180 was the microcomposite value area high from this distribution, and we kept on having trouble. We popped up a couple times, but we couldn't get above that 1184. So this would actually be not a bad trade to take. If we break above the 1180, get long into that 1184, 1185.25. And above it, 1185.25, everything shifts up to the 1190 and 92.75, but I'm really watching this 95.90 with that 1203.80 as the extended target. So then above that, you've got the all-time high in the RTH session at 1210.70, and then the all-time high at 1212.70. And again, I still think if we get above that 1190 area, that we're going to see all-time new highs and the equalization of the high in the Russell. Below key level right now is this 1166.50. If we get below that, I'd be looking for a move down to the 62.90 value area low of the microcomposite. And break below that, then I'm targeting that 1153.80, and that was where we accepted value once we broke out of this distribution zone here. We've got these two microcomposite value area low from this distribution and value area high from this distribution right in around that 1150, 1149 area. So if we get below there, you got a really nice destination trade into first 1147.60, but I'd be targeting that 1140, 1139.20 area. I think we're going to come back into this distribution, and of course the microcomposite VPOC is right there. And then just you can see how that lines up with the value area high as well from this accumulation zone down here. And then once we break that, the key level we have to hold is this 1126.70. Anything below that, then I'd be targeting that 1118.90, but more importantly, the composite VPOC down here at 1116.60. That's the most traded price going back to that October 2013. And then once we're in this area, I'd be looking to come down and test the other side of the lower side of that value area down here at that 1098.60 with the former microcomposite just below it at 1096.50. So that's the big picture I'm looking at in the Russell for this week. Want to take a look at quick look at gold. I wanted to show you something. This is another trade that I took as well last night. This is again one of my favorite trade setups. Is you've got a FUBAR, Mr. Sneaky, Tech Gap, and you know, they took it up. They left the naked cross down here at 1268.70. I'll show you, how that comes into balance on the composite, and then they FUBAR'd it, put a Mr. Sneaky in, created this technical gap, and then we got to move down to close the gap. They tried to rally, we couldn't get above the high of the FUBAR, and then they sold off, and they came down and hit the first target after the break of the 9 EMA tech gap close, and then they've got a beautiful trend going on down right now. So, whereas, last several months I've been long on gold, this got me short, last night, and I'm going to stay short on this until I think we're going to get a bit of a blow off top on the indices, so I'm going to ride this down. I'm looking for a move down to, well, let's take a look at where I'm looking at. Let's just get rid of this chart and bring up our gold composite. So right now we're trading down in this 1264.80 area. Balance is just above us at 1268.10, and currently we're in this distribution zone. If we break below this 1258.90, then I'm targeting 1255.70, but I'm really thinking that if we get a nice strong move up this week in the indices, that we could come back down to this 1247. So I'm going to hang on to this gold short for the time being and see if we get a bigger move down to test this 1247. Currently right now I've got my stop up at 1272.80. That's above the value area and above the sorry, to say 82. 1272.80 is my stop, and I'm hoping that the CLVN at 71.40 in this value area high holds. Above that, then it's likely to get a rotation back up to the 77.80, and I'm not going to hang in there. I built some Theo up now overnight, and I've got a fairly decent entry, and I'm comfortable with it right now. And if it takes me out, it still makes a little bit of money for my work, but I'll know I'm wrong, because I think if we get above the 71.40, we're going to be in that 1278 area, but most likely come up and test that 1281. Anything above 1281, I'll be getting long again into the 1287, but more importantly, back to the composite VPOC at 1296.10. Remember, this composite VPOC is the most traded price going back to October the 24th, 2008. So I want to be in the long. And my long-term hypothesis on gold is that we're going higher. I'm looking for the 1500s, but right now I'm taking advantage of the setup, which is the 15-minute tech gap, FUBAR tech gap, Mr. Sneaky, and I'll take that trade all day long whenever it happens, as you know, and we'll see if we get a little bit of a bigger move. And from there, we'll wait and see what the auction gives us. So that is going to complete our morning pre-market session. As always, trade well, trade safe, and we'll catch you on the flip side.